Joining me now is Nicholas Sorour, Portfolio Manager at Sasfin. I'm sure you're wondering why I'm smiling and laughing so much, and this is because we're debating as to why Goldfields and Harmony up almost between 5 and 6% today. And your reason, Nicholas, is?
My reason is the general flight to safety, which
Yes.
is the common answer to this question. It's a very interesting point because, as we well know, the gold stocks have come down tremendously off very high levels. I mean, in some cases down to 3-year lows, specifically in Anglo Gold's case. But if you look at the rand price of gold, it's remained fairly stable. Anything from around about 12,000 rand an ounce to 13,000 rand an ounce, thereabouts. If you have a look at new gold, you get a very good idea of where the rand price of gold is. So at the moment, with so much concern regarding Europe, and you have that general concern about where to put your money, and gold is considered one of those places. So we've seen the gold price rise up.
But what has changed from a couple of weeks ago when we're talking about the gold miners and going, okay, Harmony really disappointed on the numbers, Goldfields not looking as rosy as everyone was expecting as well. What has really changed? I mean, Harmony is sitting, look at that, 82 Rand a share. I remember when it reached the over 100 Rand mark.
I just think gold stocks overshot to the downside. All right, there was relative value at those kind of levels, even with the risks that you have in South Africa, even with slightly disappointing numbers and the pullbacks in volumes. The stocks are worth something. I mean, we mustn't forget that the gold price in rand terms is still very, very advantageous for these gold companies. I mean, if you have a look at their general cost per ounce, it's still way below what the current rand value is. So they're still making a decent profit per ounce of platinum. Yeah. The stocks just got too cheap. At the moment, people are trying to shuffle around their money saying, where do we go? One of the options are, well, South African gold stocks are looking really cheap at the moment. Some of them are at 30–40% levels below what they were 6 months ago. Maybe there's an opportunity here. So you would sell off some stocks that you've done incredibly well, and it'll just be a shifting of wealth and money.
So SAB out with results today. What is your view
South African Breweries and
company?
Mr. Price, those were the two big ones, in my opinion. South African Breweries...
SAB is down 1%
Yes,
today.
it is. I think for a couple of investment houses, it disappointed on the EBITDA numbers. We don't think so. We actually quite enjoyed those numbers. We thought it was pretty decent under very difficult circumstances. We need to understand South African Breweries is an international brewer. I mean, they're in developed markets as well as developing markets. And again, it's a situation where you have underperformance in Europe because of the current economic conditions, but outperformance in Latin America, Asia, and Africa, and then pretty flat numbers in America. So it gives you a good idea of what the world's looking like at the moment. Things seem to have stabilized in America. Latin America is doing incredibly well. Africa's still growing. Asia's still looking okay, but Europe, not a disaster, but definitely pressure coming through there. However, for such a large company, they managed to increase their organic volume by around about 4%, which in our opinion is pretty decent.
They're so diversified. I mean, one territory doesn't do well, it's more than likely someone else is going to fill that gap.
It's not a bad business to consider. I mean, it's fairly stable in our opinion, and might be giving an opportunity coming off from around about the 330 Rand level. I think it got to at a high level, and now we're below critical level now. About 315, 316 technically was critical. But it's good news for those that want to get involved in the business. I think you could see maybe a dip down now to around the early 300 Rand level, and I would be happy to accumulate stock at that area.
So Mr. Price out with results yesterday, and market also not liking that news.
Well, now they liked it because the stock was up again today. So the funny market, I think once they digested the numbers, worked out their figures, and realized actually it was a stellar result.
100 Rand on the dot.
Correct, and the prospect for further growth is, in our opinion, also pretty exceptional. I think there's a toss-up here that some people believe that the retail market in South Africa is overpriced at the moment. It's overheated. There's a bubble. There are quite a few investment houses speaking about that. So that's the one hand of the coin that probably you saw some people selling yesterday. The other side of the coin are the investment houses that believe that Africa is the next growth phase for these businesses to expand into Africa, and really believe in the African consumer now. As we saw in China, the same situation happening in Africa, and that premium's been placed. And we've seen that in the results that they've opened up their first store in Nigeria that's doing very well. That was opened in March. They're opening up a store in Ghana now, and they're testing the waters. They're seeing how things are going to go. But in their opinion, Africa by the year 2040, which I know is a long, long way away, is going to have more consumers than China and India. So it gives you an idea that, from a long-term retail perspective, you could see further growth.
And you just really got to look way ahead, it seems. Is Anglo American really sitting at 265 and BHP Billiton at 223?
Yeah, that's
Are these stocks really cheap, or am I going crazy?
Well, I like to think they're really cheap. The current prices are looking like there's further downside expected there. But Anglo American at 265, I guess on a PE ratio of below 8, and Billiton back down to the mid-220s on also a PE ratio of 8. I think what they're reflecting is they're reflecting the concern that we have for world growth. Resource companies are a proxy of world growth. if you feel that world growth is going to be coming under pressure like it is currently, and resource demand is going to be coming under pressure, and you've got comments from Marius Kloppers saying that they're not going to continue with this massive expansion projects that they had on the go, that scares investors, and they tend to
but that should
discount
be a sign
that
they're
future.
being prudent, though, and saying, well, we're just going to hold back on expanding, which means that we won't have excess capacity.
The point is, we all need resources. You can't just stick your head in the sand, and there is inherent value in these companies. I just think we need to understand the environment right now is cautious, hence the current sell-off. But there's no doubt, in my opinion, that Billiton and Anglo-American at these kind of levels are certainly showing some value. Could they get cheaper? Absolutely. I mean, if if Greece leaves the EU, well, this is all going to be down no matter where you are. That's just the...
And I'm sure you'll see this as an opportunity to buy, right?
Correct, because these are the times to buy in a crisis. This usually offers the best value.
Okay, so Tiger Brands has taken quite a knock as well, just watching it, and it's still negative
I haven't
territory.
actually been keeping track of it, but now that you mention it, 253 is a lot lower than I remember.
Down around 5% yesterday. It's down 1.4% today. Again, market looking at those numbers that they released and perhaps not, liking what they're hearing. But again, it's a good story. It's an Africa story. It's a South Africa story. Some
very important brands, household brands and so on. So, yeah, absolutely. It's not a company that we specifically spend a lot of time on. It's not something that I've really researched into as well. So I haven't been keeping track of it except for the share price.
Okay, so Sasol 352?
Yes, looking interesting. Look, 350 seems to be its fighting level. It doesn't want to go below that. I think there is a little bit of a risk. I think 360, in our opinion, was a pretty important technical level. I think great value if you can get closer to around about the 330s, but I'm still nibbling here and there on Sasol.
So Richemont also under pressure. It took quite a knock yesterday. It took a knock today, and it's one of those stocks that did fantastically well in those numbers. I mean, I was completely blown away to see the
I
growth
was as well. I couldn't believe it.
Asia.
It just shows the Asian
rand
consumer. Yeah. No, well, I guess it really, look, it was up about, what was it, about 7 or 8% from 48 to 51. Again, it's maybe some profit taking, a little bit of a concern about world growth as well. Can they keep those numbers going and going? Is it priced for perfection? I still think that there's upside, and quite frankly, any major weakness on Richemont is worth buying. My opinion, 46 Rand is a little bit cheaper, so if it gets to 46, I will be smiling.
Fantastic, great. So lots of smiles here today.
Yeah.
Thank you, Nicholas. Great
Pleasure.
to have you in studio. Much appreciated. Nicholas Sorour, Portfolio Manager at Sasfin Securities.